Hey everyone, welcome. It is 1 o'clock on November 13th. We just got the closing bell, and it was a pretty inactive period. Kind of boring, probably less activity than any of the days that we saw last week, even. So let's just take a look at what happened. So just because it was inactive and kind of boring doesn't mean we didn't get good data or some good information out of the trading session. So you can see that volume is way, 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 way down. It's way lower. It's about like just maybe 60% of even the lowest days that we had last week. And the trading range is very muted. It is just slightly smaller than the smallest days last week. So it seems like there wasn't a lot of traders in the markets. It could be because of Veterans Day weekend, some people still taking some time off, or you're also waiting for all of the stuff that's coming out tomorrow. So we've got the CPI coming out tomorrow, and then we've got a bunch of retail data coming out later in the week. So CPI is happening at 5:30 Pacific. That's an hour before the market starts. So if there's anything significant in there, we will see a reaction in the futures markets. And so we'll be able to see that in tomorrow's pre-market video and decide how that's going to influence the markets. As far as trading action today, we did get a slightly higher high today. We closed slightly down 0.09. So really, we just chopped sideways. However, that data does give us a better view of what is happening. We did not get a low above the moving averages, above that MA90. We have a low inside of the MA90, and really this just moves sideways. And now, if we look at the original pullback scenario that we were considering before, hey, we're going to pull back before we move upwards. Well, if we pull back down into that MA50, that's basically the same level as the MA150 and the EMA20 at this point in time. So if we pull back, we can't really even call that a pullback. It's really just chopping sideways in between the MA50 and the MA90, just like we saw all last week. So that pullback scenario has become the exact same as the consolidation scenario. And that's basically what we have here. Yeah, we had a close above the MA90, and today's close is probably a little bit above that MA90 as well. Yeah, so at 440.21, whereas the MA90 is at 438.41. So yes, we are above it, but we didn't trade completely out of it. So for me to consider this a breakout, I need to see that low above that MA90, or I need to see a high conviction bar moving up out of the range. So otherwise, it's just still consolidation that is kind of moving along the top range of that consolidation. And anything beyond any real pullback now would have to get to that 50% retracement level, which would be the same as the MA200. And that's lower probability on our list. So now we're just looking at this consolidation scenario, and then we're just waiting for us to break up out of the consolidation. So like I said, we need to get that low above that MA90, or I need to see a high conviction bar. That high conviction bar will come with volume and it will come with range. So a decent example of that is GD. Okay, so in GD, we had this consolidation range right here. And it was actually a flat top triangle. So what we want to see is like this bar is very solidly green. There's not a big tail. There's not a big wick. And it is a decent range that is larger than this day and larger than this day, larger than all these days, although not by much on a couple of the days, but is still a larger range and a larger than normal range. So this is a conviction bar. It doesn't have the volume because the overall market didn't have the volume today, but this is with conviction moving above that breakout line. So that's what I'm looking for in the S&P 500 as well. that's going to convince me that we've actually broken out and that we're ready to move higher. So right now we're in consolidation. We still want to have relatively neutral positions. If I have a long, I want a short, or I want limited risk to either side. However you want to balance that out is up to you, but we just don't want to get too directional in our trading until we get a clear indication of direction in the market. And at this point, it's likely higher, but again, we don't want to jump the gun and assume. We want to wait for the market to show us that it's actually going to move higher. If you look at QQQ, QQQ is actually lower, so a little bit more significantly lower than the S&P 500, down 0.3%. Still mostly sideways movement, but it does give us a little bit of a downward sloping line if we just draw from close to close right here. And a lot will depend on the retail sales. Retail sales contains a lot of consumer discretionary, and QQQ is heavy on consumer discretionary and tech. So we're going to wait and see how the CPI and the retail sales data plays out. If we look at the Dow Jones, we can see that we sort of formed a W bottom here, and it looks like we may come all the way up to this blue line that's drawn right here, but it is stronger, right? It's above these moving averages, above all its moving averages at this point. So it looks like we could fairly easily reach that blue line. So positive on the industrials, but those are more conservative stocks, right? So in theme with the consolidation or maybe a slight pullback scenario. But again, now at this point in time, the pullback scenario is really just a bounce in between the MA90 and MA50. If I look at my small cap stocks, it's just trading underneath that EMA20, and we still close basically flat, 0.03% up, but it's still just below that EMA8 and EMA20. So far having trouble getting above that. So everything is speaking consolidation sideways, which means I'm waiting for more data. I'm waiting for a catalyst or a stimulus. And that is, so far, the ones that we can see are the CPI, which will influence the Fed, the PPI, which will influence the Fed, and then retail sales. And we happen to have the earnings of some major retailers happening on the same week as the retail sales report. So retail sales is going to be it could become a major driver of the markets this week. So I won't be surprised after CPI. CPI is a lot of volatility always, or at least in the last couple of years. CPI has always generated a lot of volatility, but in the last couple of months or so, not necessarily a lot of directionality. So I'm really going to be looking to those retail sales to really give me a direction. That said, the words out of my mouth, volatility is down. And if I wouldn't try to read a long-term volatility out of the statement I just made. Just know that intraday, you're probably going to get volatility. So if you want to trade a day trade volatility, that's possible, although it's extremely volatile. So you have to have a really strong stomach if you're going to trade volatility and day trade volatility. All right, let's take a look at sectors. Let's see where sectors are moving around. I should probably reload that. Okay, and energies getting attention, silver getting attention, healthcare, consumer discretionary. So polar opposites right here. Healthcare, very safe sector, and then discretionary is where we get some speculation going. Then we have XLP, another safe sector, and then we've got these are XLIB. Those are early stage growth or early stage economic growth sectors. And then we have energy. So energy's been kind of trading on its own independently. So I want to take a quick look at XLE because our thesis that is going to go up got invalidated last week when we broke below this MA200. Looks like we're creeping back up above that MA200 again. And so if we can get the low up above that MA 200 for 2 days, then we might be interested in XLE again. Let's take a quick overview of all of the sectors, actually, and just get a quick look of just overall directionality. Now, when we're looking at the overall long-term directionality, we're just taking a look from far away. It's like we're getting the 10,000, 20, 30,000 foot view from an airplane looking down. And so I don't care about all the little details in here. There's a very famous trader who said, stand from across the room, what direction is it moving? And that's a very good principle to go by because you don't really care about the details whatsoever. All you're looking for is the movement and the direction. So if I look at XLE, it looks like from the very far view, right? What would I draw? I would draw a line like this and then a line like this, and then it's starting to bounce up. So it's looking like it could recover, looking like a pullback and a bounce. This is straight down, downward sloping. Silver is not quite there yet. XLV, very similar, down, 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 not looking very good at all. XLY is looking like it's about to recover, but it is hitting resistance at this particular moment. Today it broke out of that resistance. XLY, it broke out. You see it broke out above that MA50 right there, and the MA150 right there. So this is short-term looking bullish, actually, XLY. If we look at gold chopping sideways, but finding support right here. So I would very short term be comfortable trading gold up to 185. XLP is down, waving up, pull back, and so that looks like it could go back down. If we look at the Dow Jones looks very similar to XLY. So we trade those, except it broke out even more strongly than XLY, so even stronger for Dow Jones, but just being aware of the horizontal resistance that's nearby. XLI is looking very similar, except it has not broken above its moving averages yet, so it hasn't broken above its resistance yet. So that's going to have some headwinds for it. So it's going to limit its ability to go up. So until we can get past that point, we would say that we'll wait and see. This looks like this is about to get stuck. IWM, small cap stocks looking very clearly like it's a downtrend, a very couple of days of gapping up, then pulling down, strolling, consolidating on a very short term, but still looking like it's very short, very bearish. And then S&P 500 is looking strong, broke out above this horizontal resistance. So this uptrend, downtrend, uptrend. So it's looking like it's forming that new uptrend that we've been talking about the last probably week, maybe 2 weeks by now. XLB looking weak, looking very similar to IWM. And then XLC is looking strong, but it's mostly consolidating since July, and we are brushing up against that upper range. So unless we get some strength into the markets and we can break out, similar to the breakouts that we were talking about earlier on the S&P, then we're just going to expect this to continue chopping sideways. A sideways trend on the QQQ, although on the short term, it does look like very gently there was a downward slope, and we did break above it, but we are not above these highs, so we can't be certain that that is going to last just yet. But overall, I would classify this very similar to the S&P 500, up, down, up, ready to continue that movement upwards. XLF is looking very similar to these guys, except stronger. IWM and XLB, except stronger, brushing against its MA 150. Looks like, is that the 150? No, that's the MA90. So this is actually very similar to the S&P 500, bouncing in between its moving averages, MA50 and MA90. And so just waiting to see if it can get above that or see how long it's going to consolidate sideways. TMF bonds looks very clearly downwards, pullback, and then resumption downward. If that resumes downward, that's going to put pressure on stocks. So a consolidation, continued consolidation in the S&P 500 would be likely in that case. Real estate down, looking very much like IWM, and then XLU down stronger than IWM, came up all the way up to this orange line, which is that MA90, before pulling back into its moving averages right here, finding a little bit of support right here, but overall still not quite ready for us to believe that it's going to move upwards. So you can see that we have a mixed bag all across the sectors. Only a couple that are looking kind of bullish, a few that are neutral, several that are looking downward biased. So we really need to see strength in the market and the S&P 500 to break up above that MA90. And when we have clear, distinctive breakout, that's when you're going to see interest in a lot of these sectors, except for the ones that are more defensive. You may see people dumping those. So I'd be hyper aware of that. But this week, retail sales is going to be the major focus. That's going to be what is going to drive us in the later half of the week. And so we should watch the earnings very carefully and that retail sales report on Wednesday to get a clue of what direction we might go. Because right now we're about 50-50, but mostly consolidation. Well, I shouldn't say we're 50-50. We're neutral. We're just consolidating sideways. But the news that's coming later this week could cause us to start showing a bias either upwards or downwards. Okay, so hopefully that's giving you a clear picture. You can see how our opinion has evolved from last week until now. So before we were just saying a little bit stronger emphasis on the pullback, but now as things are developing, we have to be flexible. We don't want to lock ourselves in our minds, in our own opinions. We don't want to have ego. We don't want to be like, oh, I said this and that was my opinion, so I'm going to stick to it because I don't want to be wrong. Well, that's how we lose money. Again, we need to remove our ego from when we're trading. We are going to be wrong sometimes. We're going to just make sure that when we are wrong, we're not hurt too much when we're wrong. And then when we're right, we can make a lot of money. Or we adopt strategies where we still make money when we're wrong, as long as we're not wrong too much. Or if we have really good hedging capability, then even whether we're wrong or we're right, we'll just keep on making that steady income. So there's a lot of ways to approach the market. Most people just have directionality and conviction of their opinion and they trade their opinion, but there's a lot of ways that we can work it so that you can have a nice steady stream of income no matter which way it goes. Okay. So hopefully we'll get more opportunities to show that, but you can see it that we're always practicing our flexibility of mind. And as we get more information, we change our opinions if necessary. Okay. All right. So that'll be it for today. I will see you tomorrow morning. Tomorrow morning, we'll have had that CPI data and we'll get to see what the market's reaction is. And then we'll form our opinion of how the day might form and what that means in the larger scope of the S&P 500. All right, so I'll see you tomorrow. Have a wonderful rest of your day.